Welcome back to Indianomics. We've been speaking with RBI Governor Raghuram Rajan. Governor, payment banks, I was extremely excited that very capable entities, cutting-edge companies are being given, and not one but 11 licenses. Now, the first question that comes to the mind is, how are you going to allow them to open bank accounts? They already do KYC. For instance, the telecom guys, Idea, Airtel, Vodafone, have already done KYC. Can they just open a bank account because the KYC is done on the day they get the license? Can they just send a message that if you answer yes, then your account is opened? Is it going to be as simple as that?
Well, first, I think the extent of KYC that's done for a telecom account can be different from that which is required for a banking account.
That was my fear.
Now that said, the bank KYCs are being integrated into a common KYC pool. So it's not unthinkable that by the time these payment banks come on board, they'll be able to tap into the central KYC and say, thus and such person, well, every household is now linked through PMJDY. There should be a KYC associated. Can I pull that off? Aadhaar could work as a KYC for the amounts that the payment banks handle in the account. So there are different ways that this can be done. It may not be directly the mobile KYC that's already been done, but there could be a bank sufficient KYC which exists somewhere.
You know, there was an RBI rule sometime back, I think 2004 or 2005, that for no-frill accounts, really you don't, it's almost no KYC.
Yeah.
So why can't you allow...
Self-declaration.
Self-declaration.
So
why can't you allow... the whole problem is even SBI has only 50 million accounts.
Yeah.
Idea has 168 million accounts.
Yeah.
Airtel has, 250 million accounts. We would have financial inclusion, in a jiffy if you allowed it.
So
will you all be stuck and make this another bureaucratic quagmire, this KYC?
No, I'm telling you there are ways around it already. eKYC, then you said 160 million and 80 million. There are 900 million going up to 1 billion Aadhaar accounts. So you can do Aadhaar, and Aadhaar immediately gives you enough KYC to open a bank account. So,
but the court might put a spoke in the wheel, isn't it?
No, I think on a voluntary basis, if you give your Aadhaar, there's no problem to. I mean, this is not an entitlement and so on. That it's just another form of ID. It's one of the acceptable forms of IDs. I'm saying that the bureaucratic sort of roadblock you're fearing doesn't exist. That in fact it can be done quite easily. So
maybe 18 months or whatever, 15 months down the line, when these telecom guys open their bank accounts, can we expect that we are going to see a quadrupling of bank accounts? Maybe there will be multiple accounts, but...
I would hope so. I would hope so. And remember, we're a dynamic regulator, so if there are problems, we'll see what the problems are and adjust accordingly. The whole objective here is to enhance inclusion and not to create roadblocks. And to some extent, if there are roadblocks, we will work on them. See, we emphasize too much documentation up front also.
Yes.
That there is also a need to monitor accounts. Perhaps a lot of the action can be if you say, okay, I'm going to do very minimal KYC up front, but then I'll make sure that if there's excess activity of the wrong kind in this account, we will take action. So different ways of dealing with the concerns that people have, and I think we can work with banks on that.
Okay. How do you see the mid-cap banks, PSU and private, say, especially the old private banks, coming up to speed with this competition? Could it sound the death knell of many of these banks? They have not even responded. A large number of mid-cap banks, and this is ownership neutral, have not even responded. They don't tell you that we can open your account in 4 minutes and 5 minutes. Very few people have given that, have shown that proactivity. Do you fear major casualties?
Well, first, the competition hasn't really started as yet. It's on its way. Second, there are some mid-cap banks which are doing quite well. I don't want to take names again, but they have revamped themselves. And remember, the small finance bank is essentially a mid-cap bank, except that these guys are used to dealing with small guys and have figured out operational structures that are efficient, low cost, and so on. My hope is, yes, this competition will make these people sort of look towards where they can gain advantage. And I would sense it's really in the small and medium industries where they can make a big difference, and they will utilize their capabilities there.
Okay, so you see a lot of
I see some churn. There will be churn. Whether it's consolidation, I mean, you may lose your soul if you're a small or medium-sized bank by merging with a large bank. But it may be that management changes, or they get fresh investors who take them in certain directions, or they themselves have a change of heart. I don't think that things will remain as they are. There will be change.
Governor,
let me just interrupt you one. I mean, one entity which I'm interested in watching are these online exchanges, marketplaces, because they have access to small entrepreneurs and their sales and so on. And so some of them are already talking about making loans. Now, we're sort of trying to look at that carefully to make sure we understand it. But, who better to lend sometimes than somebody who has a full picture of your cash flows and knows who you're billing and what your monthly sales are. So that is an opportunity that with the right tie-ups or with the right, with the right bank, with the right distinct player or the right NBFC, could be a big source of new financing for NBFCs and for your small handicraft maker sitting in Srinagar who's making carpets but needs a bigger market. He could get both the market as well as financing through these kinds of means.
You mean the guys like Paytm?
I'm talking about your Snapdeals and your Flipkarts and all those guys, or Paytm, or a whole variety of entities have created online marketplaces. And they're selling a whole variety of products.
And you are looking at rules to make it easy for them to give credit?
Let's put it this way. We are looking at some entities have already started. We're trying to look at this to understand this better. It's still small. But are there ways we can facilitate the joining up of the information and the control they have over these entrepreneurs with financing? Should it be them? Should it be a separate entity? Should it be a bank? How do we actually make this work?
At the moment, you're not allowing payment banks to give loans, but you will allow them to be a DSA for an NBFC.
Exactly.
That's how you see them playing out.
Yes.
Okay. Well, actually, I was coming to another question altogether. The annual report and the dividend that you gave the government, I mean, 65,000 crores.
The what report?
Your own annual report, Reserve Bank annual report.
Okay.
The dividend that you gave the government was a whopping 65,000 crores. Doesn't this infringe on RBI independence and autonomy? I mean, all the while governors were fighting with the finance ministry not to give more than 10,000 crore. How come you gave so much?
So what we have to do is figure out how much we need for our balance sheet. Okay, of the profits we make every year, we pass on a certain amount to the government, and in the past we were taking some to our balance sheet as sort of squirreling away capital for the future. Okay. Now, this was done under a variety of rules of thumb, arrangements, board-approved arrangements, of course, but which didn't amount to a significant whole. So what we did was we asked Mr. Maligam, or one of our most respected board members, to essentially figure out how much capital we needed on a sort of modern first-rate basis, using the methods that were used elsewhere. I think they did a quick job, his committee, in trying to estimate what capital we needed, and concluded we could pay out our dividends, our profits, for the span of 3 years, while still maintaining enough capital buffer to protect the bank against all these things. Most recently, we have done a value at risk analysis of the bank's balance sheet to understand how much capital we need. This is state-of-the-art, checked with people like BIS. In fact, we are one of the few banks ahead of the curve on this. And we have come up with some numbers. And the board has said that you will keep this amount. Essentially, it would like the highest rating. Okay. Enough capital to get a AAA rating in international markets, and a buffer in case there is a need There's a systemic risk that we need to pay down, and the rest can be paid out to the government. That still allows us enough room to pay the 67,000 crores that we paid out this year. However, the precise contours of the agreement on dividend has to be finalized with the government. We've made presentations, we're talking, and the board has given us some guidance. Ultimately, this will be an agreement with the government which we'll take going forward.
What is this percentage of capital that is globally accepted as
Well, let me put it this way. Right now, the RBI is one of the best capitalized central banks in the world.
Okay.
Even after paying the 67,000 crores as dividend.
And you will, you're sure future finance ministers will allow you to be that capitalized?
No, I think
because once you taste blood, the fear is that...
Which is precisely why we need a method, a systematic way of doing this, which is what the sort of framework for determining bank capital will provide us. So that is the framework that is being discussed with the government right now, and the board has expressed its, after all, the board determines the dividend. Government appoints the board, but it's a board-driven bank. So the board has said that it intends to keep this as the guideline on which it will declare dividend, and that was what it followed in declaring this year's dividend.
No, the big fear is that if the future years when the Reserve Bank doesn't make profits, will it be just forced to keep up with the previous year's numbers?
No, so we have made some suggestions on dividend smoothing to the government, that if rather than have peaks and falls, that it be smooth. But the reality of all central banks is over time, as we move towards electronic money, we won't have the kind of profits that we have today. So, it will start coming down. Of course, in India so far, the usage of cash, which is where we make our profits, has been going up. But at some point, it will dwindle. So we need to keep in mind that far from financing the government, 10, 15 years from now, the government may have to finance us. Okay,
that's not very good for your autonomy, is it?
No, but
you should be putting away more money.
Right now, we tax the public through seniorage.
Okay.
Eventually, the government will have to tax the public to pay for these essential services. This is when people no longer use cash. It's quite some way away. But it is a possibility that, in Western countries, the usage of cash is starting to come down, and central banks are thinking about where they make the money.
Okay. Well, I must be running out of time. Just a few questions on gold. The sovereign bond scheme, how does it make the country secure from the citizens buying gold? Instead of the citizens buying gold now, the government will have to buy gold to pay back when the bond matures. What's the whole point of this bond scheme?
No, so you're asking a very good question. Does it substitute or does it push forward in time? So if the government, if somebody bought a gold bond and the government wanted to be fully hedged, it would go out and buy the equivalent amount in gold today, so it doesn't actually deal with the problem of demand. So the only way this sort of works in reducing demand is if somebody wanted to buy gold in order to keep it as an investment, decided they rather buy a gold bond because they get some interest on it and the interest rate is quite attractive, and stayed with it, but the government, instead of hedging the gold by going out and buying gold, took the gold risk on its balance sheet.
But that would be foolish. So you did it at $1,000 now, and we've seen 1950 just about 24 months back.
Well, so the government will have to manage gold price risk as we go forward. And it's something that it will have to account for in its budget, because if the gold price starts going up and if we issue a lot of gold bonds, it will be something that it will have to account for.
Well, if the scheme is successful, it can mean bad news for the government. If too many people did this and if gold prices rose,
but remember,
it will be a manufactured foreign exchange crisis.
No, so it won't be. You don't have to buy and give gold. You will give the rupee equivalent of gold. Okay. So people don't necessarily need to go out and buy gold at that point. But the point you're making is the right one. There is risk involved in this, which the government will have to hedge as the gold scheme becomes large enough. Now, fortunately, to hedge, you don't have to buy 100% of the same quantity of gold. You can hedge with lower amounts of gold. But it is something that we will have to pay attention to as we go forward.
All right, Governor, I believe we've run out of time. Thank you very much for joining us on CNBC.
You're most welcome.